Hello and welcome to Travisa Financial's EEP Power Up. Today is our Scenario Monday, and I want to welcome you. So let's go ahead and get started. So we're going to do some Q&As in a bit and go over any scenarios that you have. But right now, I'm just going to go through a little bit about Travisa and our EEP program for those that have never joined us before. For Travisa Financial, no one serves first-time homebuyers better than us, and we have innovative loan programs that we are striving to make homeownership a dream come true for everyone. That goes along with our EEP programs and our DPA programs. We have up to 5% forgivable DPA programs. And then we also have our conventional VA, USDA, FHA that are all at amazing, amazing rates. So to go over our EEP program, the highlights consist of ITIN borrowers with 3.5% down, and that includes DACA and our non-permanent resident aliens. We have low and no credit score programs. These programs allow credit scores down to a 580 with one either traditional or non-traditional trade line. And we do have a no score program. And with this no score program, you can actually get away with just 2 trade lines, and those can be alternate trade lines. We have our 3 months bank statement program for income qualifying, and that can be used for self-employed. It can be used for W-2. It can also be used for 1099 gig workers, seasonal workers, borrowers that get tip income and they just don't claim it. So really good program for only having 3 months bank statements. We don't have any source or seasoning of funds to close. So that's great for those individuals that just may not want to put their money in the financial system and keep it at home. Bankruptcies are also okay. We just require 1 day discharge prior to the day of closing. So you can get everything started, get your loan going, under contract, case number pulled, appraisal, all of that good stuff. And it just needs to be discharged 1 day prior to closing. We take all property types. If it's FHA approved property type, then we'll take that as well. We also allow up to 6% seller concessions. And so this gives your home buyer the opportunity to not bring as many funds to close if we have the seller paying a good portion of those closing costs. So a governmental, how is this done? How are we able to provide you with the EEP program? Essentially, a governmental entity is going to purchase the home that is selected by your home buyer. And then the home buyer is going to enter into a homeownership finance agreement with a memorandum that is recorded on title to secure the home buyer interest. So they're going to have an interest in this property. It's a really unique program that is going to allow your home buyer to feel as if this home is theirs. They can do whatever repairs, maintenance, upgrades, anything that they want. And they also will receive a 1099 interest statement at the end of the year, which is amazing. Qualifying the borrower. There are, again, many different ways to qualify the borrower, whether it's full doc, alt doc, 3 months bank statements. We have P&L programs. We have the verification of rent. We only require 12 months. And our DTIs, 50 over 60, guys. That's huge. Funds to close. Again, we can take that 6% to help offset any closing costs. In addition, we do allow gift funds. So gift funds can be a huge help to assist your home buyer in getting into the home of their dreams. So if you've been out there comparing the ITIN market, you should know that there's a lot more restrictions and guidelines than what we're talking about today. With our earned equity, we have 3.5% down, where other lenders are at a 15 to 20% minimum down. We also only have the 3 months bank statements, where most lenders, again, for ITIN are 12 to 24 months. Our DTI is 50 over 60, and most other lenders are at about 43 back end. And if they want to go any higher, then they do require the comp factors, which is something that we do not require. Another huge benefit about coming to us for our EEP program is the credit score. Credit scores down to 580 over here with only one major bureau. If there's only one bureau reporting, then that's the bureau we're going to take. We don't require any other bureaus at that point. As you can see here, other lenders are going to require 700 or higher. So we definitely, if you look at this comparison, we beat our competitors in down payment amount, number of bank statements required, max DTI, credit score, and no score. Our EEP program has an amazing support center, not only with our 888 number, our email address that you can email any EEP questions to, but we also have an amazing sales staff. We have an amazing operations staff that is here to help you, lead you, guide you, take you along the way on any questions that you may have from start to finish. All right, everybody, it is time for our Q&A. And so if any of you guys have any questions, our chat is locked down. And so if you have any questions, please feel free to raise your hand, or we have our Q&A box that's open and available if you want to ask any questions through there. While we're waiting to see if anybody has any questions, I did just want to go over a few of our questions that are asked quite often. One of the first questions that I do get a lot is a pest inspection required? So for the pest inspection, the government entity, they go off of VA guidelines. So there is a termite pest inspection that is required in the 35 states. Another question that I do get a lot is, what if my home buyer lives rent-free? How am I going to document my 12 months rent history? If you have a home buyer that is living rent-free, possibly they're living with family, or they're living with a friend and they don't pay rent, maybe they buy groceries or pay for utilities, or does work around the house, that's completely fine. We just need a letter of explanation explaining that they live rent-free. And so that's one of the great niches that we have over here at Travisa. Another question that I get is in regard to the income and the bank statements. For the bank statement program, the self-employed borrowers, there is a standard 45% expense ratio. Although something that we have is we have a tiered option. So depending on whether they're service-based or a product-based business, we can actually, for just a little bit of extra documentation, we can go off of a tiered expense ratio that runs anywhere from 0% up to about 25%. So that's a great option when you're looking at trying to qualify your self-employed borrowers. I thank you so much for joining us today, and I look forward to seeing your submissions, or give me a call. I'd love to answer any questions and get to know you better. Thank you so much. Have a wonderful Monday.